Hey everybody, good morning. I'm just sitting down at my desk today, getting ready to look at the markets, get ready for some day trading. I did record my trading yesterday, which is sort of a new experience for me. And I've actually done it only a couple times in the past and usually don't end up posting it because I find that when I'm recording, when I'm trying to trade, I tend to not trade very well. Probably just because I'm distracted or I don't know what it is. So I sort of ended the recording at break even yesterday. You could watch the recording. I did put it up, and but I actually ended up going back on after lunch. I signed off, did some things, had some lunch, went back on. The market was showing some opportunities. I actually ended the day yesterday about plus $450 before commissions, which is not too bad. Not great, but not too bad. Um, so yeah, so let's look at this. So we talked a little bit about sort of what was going on in the market. We had this big swing. You know, people who are in our group, we took some trades down here. We bought some double beta index ETFs. We bought QLD and SSO down here and really took a nice ride up. I actually stopped out of my QLD up here yesterday. I'm still holding the SSO position, so we'll see how that goes. We had identified some key levels yesterday, and those ended up holding pretty well. And we could see, we had this, if we kind of map out this swing from down here on up, and we could even kind of make this a bit more inclusive of the full swing. And we can see really the highest volume occurred here. And I put some lines there just to sort of keep us oriented as we were zooming in. And we can see that's exactly kind of where the market came down to yesterday and just sort of held. So we seem to be building some, a little bit of volume in this area. There's a bunch of volume up here from this high still that we want to be aware of. We kind of rejected off of those levels yesterday. And I'll show you what I mean. If we just bring this over actually here, we can even bring in some of this previous move and see this high volume area right here. So that's, we had marked that off yesterday as well. I took the drawing off right now because I was doing some other things, but we can see that that is really close to where price rejected from yesterday, right? So relatively predictable move, rejecting off of high volume there, returning to high volume here. Relatively predictable. My mistake yesterday, by the way, was it was sort of an internal bias mistake. So I trade differently depending on whether we're in a consolidation, whether volatility is compressing essentially, or whether we are in an expansion and we're trending, right? So we have some things that we look for to tell us whether we should be leaning towards mean reversion type strategies, which would be a consolidating market, versus trend following strategies, which would be more of a trending market. And really yesterday, although on this bigger 1 hour time frame, this is very much like a mean reversion type area, right? If you look at here, it's really all we're doing is returning to these high volume areas. But on the short time frame, yesterday was really a trending day, and I wasn't treating it in the morning like a trending day, and that's why I was sort of break even by the end of my video. The second half of the day, you can see here, was very much a consolidation, and so I was expecting more consolidation up here, and I was trying to trade up here as though it were consolidating, even though some of my other indicators, like my volatility indicators down here, which are sort of irrelevant at the moment because this is the 5-minute volatility and the 15-minute volatility, so they're really, this is in 1 hour charts. These are really too small for what we're talking about on this chart, but you can use these volatility indicators to give us an idea whether we should be leaning towards trending or consolidating. And a big part of the day yesterday, I think part of the challenge was we were sort of in between for a chunk of the day yesterday. We were flashing signs that we might do some reverting to the mean, but then we were also flashing some signs of trending. And my internal bias was just towards mean reversion, and that caused me to miss what could have been some really great moves and had me well above profit targets pretty early on in the day. So we're going to try to do better today. Definitely don't need both of these lines here, so we'll get rid of some of this stuff. So, if you were with me yesterday for my analysis, kind of mapped out some of these swings, and we're just sort of seeing where price is. And you can see we've got this large kind of purple channel. It's a little bit hard to see. Um, and that's sort of our larger swing, like kind of from like the 8 hour time frame, if we look at it there, right? And don't need that on there. So that's sort of like that larger swing from this low on up. And I mapped it here because you can see these are the control candles that we use, and it gives you a good idea of sort of helping to find the dominant time frame. And we could see that this upward move, these blue candles sort of ended here and then retraced a bit. And we tried to clear a new high and we failed, and then tried again and failed. So this to me is giving some warnings that we may want to come back down. We may come back down to this teal, bottom of this teal channel, or possibly down to the bottom of this purple channel. I don't think that's as likely, but I mean, the market is looking pretty volatile right now, and we just want to stay nimble. So that's why I tightened up my stop yesterday morning on my QLD position, and that was taken out, and I'm fine with that. And if this comes down, my SSO stop is like right below all this stuff too. So I'll be fine if that stop gets taken out, and I would just try to buy back in down low. In these sideways markets, that's really kind of what you have to do. If you're waiting for breakouts and confirmation in these sideways markets, you are going to get destroyed. So what you have to look at is more risk assessment. You know, where is the highest probability of price to go, and you know, where's the risk weighted in our favor? And so, you know, we definitely want to be thinking about those things. And one way to think about that, probably my favorite way, is to use the volume profile with a fixed range. This is one of my favorite tools. And we'll just kind of go, let's just grab like this whole thing and kind of see what we're dealing with. So right now we're still, this is our high volume area. So that's good. We could gravitate and just kind of continue to gyrate around here and build up some strength so that if the market moves forward, this area can act as strong support. If we do fall through, however, this area, you can see the price action, you know, we've got the high volume, but you should be able to tell that just from the price action, because you've got this consolidation, little rotation here and this little rotation here, and those are both lining up kind of together. And so that's going to create your high volume there. So we might want to just mark that out and be aware of it, that this is a potential high volume area. And if we do start to fall through, this would be an area that we'd look for a reaction. It's also, you know, lines up pretty close to the bottom of this channel. So what we would probably end up doing is, you know, looking for a reaction here. And if we break down the bottom of this channel convincingly, not just probe it, but like really convincingly get a close there or whatnot, we'd sort of invalidate that sign of reversal and maybe look for things to move lower at that point. There doesn't seem to be a lot down here though that we need to contend with. So I'm just not sure that we're going to do that, to be honest. I think this is a more likely thing if we break here to just test this bottom area, maybe probe it a little bit, which would be a good way to capture liquidity for those larger institutions. If there's stop losses like under this low, you know, a little probe below there would allow them to use those sell stops to basically enter their buy orders, and it would give them the liquidity they need. So we do want to be aware of that. So basically looking at this as, I would say, a relatively decent probability sort of zone. And what we may want to do, I mean, we did, you know, you can see we rejected off of this low volume. So we can say we kind of tested the top of this. What I'm talking about is specifically like these two candles here. So this, you know, you might, for instance, just using traditional price action, even have drawn this as a demand area. Oops, sorry, I forgot I was doing some things with my programmer yesterday and I changed all these colors around. Sorry, gotta get this to actually work properly now. I don't know what I did. Oh, that's because I'm on my line tool still. I'm so sorry, guys. I usually don't change my colors around much, so that kind of messed me up. Okay, so, you know, this would be like the super large demand zone. We did kind of test it there, but in all reality, we're probably looking more at just grabbing like this smaller little section down here that lines up nicely with this. You can see, you know, right with that that sort of chunk of high volume. And so I think that's a decent probability move right there that we could expect is to come down into this zone. And so we're looking at basically anything from 4162 to 4150-ish. Just technically it's 4153, but 4150-ish. And I think anywhere in there would be decent probability for us to retrace. And as far as my swing trades go, a decent area. If when I come out of these ones, right, I'm like really probably sitting just above my stop on SSO, but I could buy into QLD if the NASDAQ looks good in this area too. And then if I stop out of SSO up here, just buy back in down here and take it for the next ride up. I do think we have more bullish continuation. I think I wouldn't be surprised for us to push above these levels here. But we just might have some work to do first, ultimately. So that's, I guess, sort of from like a short to intermediate term. Could we hit this in one day? It's certainly possible. You can see we've had some huge sell-off days, right? It's very possible that we come down and hit this today, but I don't know that that's going to happen. It may take a few days for us to work our way down there. But let's zoom in a little bit more granular and see what we're dealing with, just kind of more on the short term. So on this really short term sort of chart, not really short term, I shouldn't say that. This is a 15-minute chart. So we've got, we've sort of marked off this area that we knew was a sort of high volume area for us to be aware of. We did return there, makes tons of sense. So where do we go from here? Well, this is a super strong impulse down. And if we look at this, most likely, I haven't looked at this yet. I haven't looked at this since yesterday. So the volume in here is going to be really thin. When you see these huge candles and the wicks, there's no overlap on the candles at all. Like in here, there's probably going to be some volume, maybe a little bit of volume in here, and then probably nothing till up here. So what I'm willing to sort of bet as we look at this is, let's just look at this sort of move down. And you can see we've had this little volume area right here, right? Little volume area right here. What's the highest point of that? Not totally sure. Let's see if we can't just grab. Yeah, so right there. So that would be maybe another area we might want to just be aware of. If we're gonna retrace this move today, I wouldn't be surprised to see it happen up to here, at least to get a reaction. So this level is 42.14, and actually, let me put that back on there. Where'd my profile go? There we go. And I'm just going to capture a little bit of this. So we really have volume up to here. So really, like, we have a zone that looks kind of more something like this. And, we know where our high volume node is in the middle. Our stop would probably end up, though, having to be above this high, even though the volume drops off right about here at 42.17. So what we're looking at is, reversals anywhere from, if we do move upward here, 42.12.75. You can call it 42.13 if you want to, up to 42.17. We've got like a 4-point zone in there that I don't know if it's going to reverse completely and reject down, but at least maybe to get a reaction, maybe revert back and retest this high volume area where this dotted line is here. So that if we are, like going back to that 1 hour chart, if we are going to come back and test this lower area at 41.50 or so, right, we might come up, test this, and then come down. We may come up higher because don't forget that in all reality, as we go back down to our smaller time frame chart, there is quite a bit of volume up here as well. And then, we did sort of reject off of this already. So I don't know that we need to come all the way back up there, but definitely at least to this area, there might be more volume up here if we grab some more of this stuff. Let's just see what happens. I don't know why my internet's being a little slow today with calculating this. Should pop right up. just try and draw it again. Usually doesn't take that long. Yeah, so a little bit of volume right here if we grab more of this whole thing. So there is a chance that we come all the way back up like to this area and test some of this too. Because it is kind of thin trading, but this isn't a ton of volume here. So I'm not really, honestly, I'm just not convinced that we need to do that. There just hasn't been a lot of trading up here. I think the consensus right now is that we're going sideways, and this is a little bit on the extreme. And so, we need to find out where value is, where the market says is a fair price right now. So that's some of the things we're looking at. It looks like we are pushing a little bit bullish right now as we come to about 8:30. We tend to get a little bit of volume coming in the market at 8:30. So we are pushing a little bullish, and like I said, just keep an eye. We've got the top of this channel at 42.13. We've got this high volume area at 42.14. It's all lining up with this sort of supply and demand zone right here, which starts also at about 42.13 or so. So there's a lot of confluence telling us that we could get a reaction up here. I would keep a close eye on this level. Again, not saying it's going to come like rocketing down, but you could at least put a stop up here. If you want to go above this wick, that's fine. And then maybe at least just go for like a 1-to-1 risk reward and see if you can't just get a little reaction off of some of these levels. And couple ways to play it. You could either just straight up put a, I'm going to put this here, straight up put a limit order right at that high volume node. So that's one way you could do it. Just want to get this kind of right. There we go. My line was a little off. So that would be 42.15. And that was actually a level we were looking at yesterday. I was really expecting the market to return to this yesterday as well. And that was part of what threw me off. I kept trying to go long in here, expecting us to bounce off of this consolidation here yesterday. And I wanted to go long and take it all the way up to here. And that's just not what happened. So I do think this is a decent probability. So we could just put a limit order here, or if you want to make sure you don't miss a trade, sometimes what I'll do is I'll split my risk and I'll put one sort of at the very edge of this thing, right around 42.13 or so, and then one up here about 42.15. And that way it just sort of, this one gets me in and sort of guarantees I get in the, not guarantees, but makes it more likely I get in the trade, but the risk reward isn't as good. And this one, if the price does continue to move up, just averages me in with better risk reward. Just make sure your position sizing accordingly. If you do that, don't go all in with your normal position size on your first entry. Split it in half. Or a lot of times what I'll do is this first entry might even be smaller because the risk on it is greater, and the second entry may be a little bit larger because there's less risk on it. So a few different ways you can do that. So that's kind of what I've got for today. And I think, going to try and record my trading again. And I'm going to try to trade more like I do when I'm not recording. This whole recording thing is kind of new, but we have a trade group at dpmtrades.com. We have a free section. You can totally come trade with me for free and follow along. I like to day trade futures. I do some swing and long-term trading as well. You can put up charts you want to look at. Totally free. We do have a paid section because we have some indicators that I've made. If you want access to those, we charge $25 a month. It's super cheap for a trade room. And then with that, you get the indicators, but also swing and long-term alerts for when I do put those positions on. And, but honestly, I do the trade room for fun, just to have a community. So I don't, the free thing is fine. Just join us. Just have a community to trade with. It's great. Nothing to lose there. It's totally free. So you just go to dpmtrades.com and yeah, I mean, if you want to join us, great. And like I said, I'll try and post some other stuff. You can see what I said about 8:30, often start to get some movement here. We're pushed above this resistance. So we'll kind of see what happens. Maybe we get a pre-market trade today. We'll see what happens. I'm going to sign off now and get ready to start actually trading live.